With Netflix coming out with its Q4 earnings this week, I'm a little concerned about the future of Netflix. I'm going to explain my reasonings why coming up. Yeah, so Netflix is coming out with their Q4 earnings, and I'm not so positive on their outlook, despite a lot of what the analysts are saying. I'm going to explain my reasonings why in just a second, but first, let me welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market and the world of finance is a crazy and chaotic place, and I've made it my job to help you own it. So if you want to learn more about how to do investing and day trading in the stock market, click the subscribe button and give me a good old thumbs up if you are a fan of Netflix, or if you want to learn more about how to invest in these types of tech companies. And so today's topic, we're talking about Netflix. Netflix has Q4 earnings coming out this week, and so I thought this would be an appropriate time to talk about this. Analysts are saying that they're going to be having a great Q4, that they're going to be at about 52 cents per share, and so I'm a little bit leery about them beating those earnings. And I'm going to give you the facts, I'm going to give you my opinion, and then I want to hear from you. So leave comments down below about what you think the future of Netflix might look like, maybe within the next year or the next 5 years. And so let's get to it. And so let's see what analysts are saying about Netflix and what their Q4 projections are supposed to be. And according to an article put out on the street, we will see on Tuesday if Netflix's Q4 report gives the rally fresh fuel or derails it, or for that matter, does neither. The FactSet consensus is for Q4 revenue of $5.5 billion, up 30% annually, and a GAAP EPS of 52 cents, or earnings per share at 52 cents. But Netflix subscriber numbers typically have a bigger impact on how the stock moves up post earnings. And that's what I wanted to touch on today too. I think that even though the stock might have positive earnings, which 52 cents per share, maybe they have earnings that are that high. I don't know if they will. That would be a real shocker. The only reason why I think that they may have a better earnings per share is because they raised their rates, and they're only going to be able to do that for so long. When you have competitors like Disney Plus, Apple, Hulu, all these other ones that are coming out, they're charging them far less than what Netflix is. Take Disney, for example, that's $6.99 a month. You're not going to, how do you compete with that? And now I know that Netflix has some better content, some better shows, but Netflix is still going to be in trouble in the long run, in my opinion. And while we're on the subject of Disney, take this for example. Disney Plus probably has somewhere around 30 million users. They had 10 million users on their first day, which was absolutely incredible. It's already been reported that they are taking well over 1 million users from Netflix as we speak. Netflix has about 150 million users right now worldwide, and so which is a staggering number as you compare it to about 30 million for Disney, but Disney has only been out there for a couple of months. Also consider this, Disney Plus is only available in the US, whereas Netflix right now is available worldwide. But here's what's coming down the pipe for Disney. Disney is actually going to be available in Europe in March, and then will also be available in Latin America in October. So right now the impact is minimal, but once it reaches globally, I think that's when we'll really start to see the pressure come down on Netflix. Also, when you look at the networks that Disney owns and operates, such as Fox, ABC, ESPN, and A&E, it's interesting to see how this is going to develop. The way that I see it going on is that Disney may end up providing live streaming services such as sports through Fox and ESPN, and then also offering other network television maybe for a higher cost on Disney Plus, such as A&E. Can you imagine a live PD, being able to watch live PD on your phone? I love that show. I don't know about you guys, but I just get sucked in. You always know it's interesting when you see a guy in a pickup truck without a shirt that something's about to go down. I can't get enough of that show. And you might be laughing, but it's true. Guy, no shirt, drama's coming. All right, so we know all those things about Disney Plus, and I'll give you one more good nugget of information. USA Today reported recently that analytics from firm Cohen and Company estimates Netflix lost over 1.1 million subscribers to Disney Plus with barely a month in the game. A poll conducted by the firm found that 24 million people in the U.S. subscribed to Disney Plus since its launch, while 5.8% of Netflix users canceled their subscriptions to make the switch. Now, that is a massive number, 6% of 150 million. Think about that for a second and how that might impact Netflix. Also, those numbers were put out a month ago, so I'd venture to say that Disney Plus probably has somewhere around 30 million users, give or take. since that article was published. Also, if you're a Verizon customer, you get free Disney Plus for a year. Verizon has 151 million users, so even if you conservatively say, okay, maybe only about half of those stick around on the Disney Plus platform, that's still 75 million people that maybe they could potentially keep on for their service. I think that this is really just the beginning of really strong impact towards Netflix and a lot of the other streaming services, and honestly, I think Disney is going to be at the forefront of this. I know that we have Apple that was just released in Q4, which is also going to impact Netflix as well, and then you still have yet other streaming services that are coming out in 2020. The first one's going to be Peacock that comes out in April of 2020. Now, I know a lot of you folks were upset when The Office left Netflix. Never fear, it's going to be on Peacock, so having The Office all to itself was the biggest news for NBC Universal's Peacock, even if the sitcom won't be on the service until January 2021, as it's one of the most popular shows on Netflix. But this newbie will also get a bunch of other staples such as Parks and Rec, 30 Rock, Brooklyn Nine-Nine, Cheers, Frasier, and Saturday Night Live. So yet another platform that's taking shows off of Netflix that's going to impact Netflix. And, again, this is just not another good look for the streaming service. And let's not forget about HBO Max. That's also coming out in May. They actually listed their price at $14.99, and it will be free for many AT&T and DirecTV customers, and likely anyone who gets it via cable. Key titles will include Friends, The Big Bang Theory, South Park, and the DC Comics movies. This is another thing that I think will also impact Netflix as a whole going down the road. It's going to be really tough for them. And don't get me wrong, I love Netflix, okay? I love the service. I love everything about them. I've been with Netflix pretty much since day one, back when it was, I don't know, $7.99 a month. And I think House of Cards was probably one of the first streams that I really just got sucked into and bought into the entire story. But, I just don't know how this is going to impact the company as a whole. In my opinion, I think that they're going to have to look into doing things such as live streaming, like potentially Disney Plus will probably end up moving into. We've already seen that with things like Hulu, YouTube TV, all of those types of services, Roku as well. So Netflix is going to have to change something about what it is that they do. If they want to remain competitive, in my opinion, going the route of live streaming is probably what they're going to have to end up doing. What that looks for the platform will remain to be seen, but from an investment standpoint, I think right now it's overvalued. Now, if we come over to my Thinkorswim platform and we pull up Netflix on the daily chart, you can see that since its last report of earnings, it had a really nice move. Really pretty much ever since then, it had a really big pop, came down, filled that gap, and then started to move back up. But what I will say here is that it is way overextended. There's no reason, in my opinion, for it to go all the way from 262 to 341 on virtually no catalyst to speak of whatsoever. The earnings last quarter were not that great. I don't expect the earnings this quarter to be that great. And I also expect subscriber count to have gone down substantially. So I don't expect Netflix to really have a great day this week after earnings. We'll see. Anytime you play earnings, you might as well be playing on the roulette table. We all know that. But I'm just trying to give a perspective from a long-term investing standpoint and also from a day trading standpoint that if you see and you keep watch on Netflix and after earnings, they might have good revenue, but the subscriber count is down, look for this stock to tank substantially. I think that that's really going to be the telling story for Netflix, in my opinion, and that's the reason that I'll be watching it. But I really want to hear from you. What are your thoughts on Netflix? Do you think that Netflix actually has a bright future ahead? Now, I don't think it's going anywhere, but I think that the value is going to be diminished because of all the other competition that it's facing. So I don't think Netflix is going to die, but I think right now it's extremely overvalued, and I would be going short on Netflix moving forward as these other competitors come into the space and provide additional competition. But let me know in the comments down below. I answer every single one of your comments. I love hearing from you. Give me some perspective. Am I completely off base here, or do you guys think that I'm onto something? I want to know. Let me know down in the comments below. I would love to hear from you. And that's going to do it for me, guys. As it stands right now, I have over 10,400 subscribers. It's been an amazing ride. Y'all have been really, really supportive, and I'm so fortunate to have had the community that we have built around us. If you're interested in being part of a trading community of other like-minded individuals where we celebrate each other's success, I encourage you to check down the links down below. We have a community over there. It's called WeTradeHQ.com. Go check it out. It's free to join. You can be a part of a great group and learn how to invest with other like-minded investors. So thanks again, guys, for tuning in. Please hit that thumbs up button if you like this video, subscribe, and hit that notification bell to get notified every time I put up a video. And as always, guys, I will see you all before the bell, and B Smith is out. Well, surprise, surprise, Tesla is back in the news. And, I know that I've been talking about Tesla a lot, but it's the hottest stock that's out there. Everybody's freaking out because they think that, there's going to be 500,000 Teslas recalled. We'll talk about it in a second, but first, let's get to that intro. What's going on, guys? My name is Brad, and this is Own the Chaos. The stock market and the world of investing